Hey traders, today I'm going to show you a powerful OTC trading strategy on PocketOption. And the best part? We're using just two indicators, Bollinger Bands and the RSI. Quick note. Before we start, this video is for educational purposes only. I'm not a financial advisor, and this is not investment advice. Trading involves risk, especially in OTC markets, so always practice on demo first. And never invest money you can't afford to lose. Now let's dive in. Please watch this video till the end because the both indicator settings and the twist in this strategy are very important. First, the basic strategy. When a bullish candle touches the upper Bollinger Band, a confirmation bearish candle forms, and the RSI is above 70, then normally we take a sell trade with 1-minute expiry. And when a bearish candle touches the lower Bollinger Band, a confirmation bullish candle forms, and the RSI is below 30, then we take a buy trade. But wait, something strange happens. Even though all the signals were perfect, the trade still loses. Why? Because this is the OTC market, and it doesn't follow real market behavior. It's often manipulated or behaves in reverse. If we trade it like the real market, we get trapped. So here's the trick. To win in OTC, we need to do the opposite of what we do in the real market. So now, if a bullish candle hits the upper band, RSI is above 70, and a bearish candle forms, don't take a sell, instead, take a buy trade. And if a bearish candle hits the lower band, RSI is below 30, and a bullish candle forms, don't take a buy, instead, take a sell trade. That's how you avoid the OTC trap and think like the platform. Candle time frame, 15 seconds. And trade expiry, 1 minute. Before we go into the live trades, I've made something special for you. You can download the full strategy checklist, indicator settings, and entry rules in a simple PDF format. Get it free on my Telegram channel. Link in the video description. Let's begin the real OTC trading session now. Get ready to reverse the market OTC style. Let me quickly show you why I took a buy trade here. A bullish candle touched the upper Bollinger Band, followed by a bearish confirmation candle. The RSI was above 70, which normally signals a sell in real market conditions. But this is the OTC market, and here, things often work in reverse. Instead of falling into the trap, I did the opposite. That's why I placed a buy trade, following the reverse logic of our OTC strategy. Right after I placed the buy trade, price dipped slightly. Now this is where most traders panic and think, oh no, the trade is going against me. But look closely. That dip? Just a typical OTC trap to shake out weak hands. Within a few candles, price started pushing upward again, showing strong bullish momentum. Exactly what we expected from the reverse strategy. So instead of closing early or doubting the entry, I stuck to the plan. The trade went just as expected. After a small dip, price moved up, and the trade closed in profit. This confirms that the reverse OTC logic works when followed correctly. Now let's look at another live setup. This time, I entered a sell trade, and here's why. A bearish candle touched the lower Bollinger Band. A bullish confirmation candle followed, and the RSI line was below 30, indicating an oversold condition. This is where most people would expect a buy trade in the real market. But remember, we're in OTC, so we flipped the logic. That's why I placed a sell trade instead. Right after I placed the sell trade, price started pushing up against our entry. At first, it looked like just a minor pullback, but instead of reversing down, the price kept rising. This is a perfect example of how OTC markets can sometimes behave unexpectedly, even when all our signals are correct. That's why it's important to remember, no strategy is 100%. And losses are part of the game. As you can see, this trade ended in a loss. Yes, even with the right indicators and setup, sometimes the market does the opposite. But the key is to stay calm, follow your risk management, and never chase losses. Remember, one loss doesn't define your strategy. It's all about long-term consistency, not one single trade. Here's another sell trade setup. And yes, the chart pattern is very similar to the previous one. A bearish candle touched the lower Bollinger Band. RSI was below 30, showing an oversold condition. Then a bullish confirmation candle appeared. This is where most would expect a buy, But we followed the OTC reversal logic, so I placed a sell trade instead. Just like last time, price moved a bit sideways at first, but no panic, because we're trading with a clear plan. And soon, the price started moving sharply downward, confirming the power of this exact reversal setup again. This trade closed in profit, just as expected. That's two similar-looking charts, but one lost and one won. What's the difference? Market timing and patience. That's why we don't change the strategy after one loss. We stick to it and let the long-term edge play out. Before we wrap up, let me quickly show you the exact settings I used for both indicators in this strategy. For Bollinger Bands, period 14, deviation 2. These are the settings, simple but effective. And for the RSI, period 7. This helps spot overbought and oversold zones faster. Perfect for short time frame OTC trades. Want everything in one place? Download the free PDF checklist from my Telegram channel. Link is in the description below. If you found this video helpful, like the video, comment if you want more live trades, and don't forget to subscribe with the bell icon so you never miss a new OTC strategy.